If you have a decent strategy, you know what you should trade, you go in the market every day and you lose money, we need to start to work on trading psychology and your mindset. We've compiled for you a masterclass with some of the best people we know to talk about trading psychology and mindset. These are the legends in the field. They're the best out there. You get to learn about what they think, the perspective that they have on trading psychology, and how to really shift the results to become a much better trader and much more consistent trader. We're talking about Steenbarger here, Rande Howell, and Denise Scholl. These are amazing legends in the trading psychology world out there. And you'll find all the links below after that if you want to go and watch the full interview. But this is really compiled advice. So that's really powerful. You can watch it, learn it, take some notes, or listen to this while you trade if you want to. And I'll catch you right back here at the end. Let's dive right in.
Trading psychology is like other performance psychology. In other words, if you work with people who are performing artists, or if you work with people who are professional athletes, there is a psychology to performance. And that's what we see in the trading world. And many times, the problems that people have when they first learn trading occur because they're not pursuing performance psychology. They're not pursuing performance the right way. I am actually a big fan of paper trading or trading in simulation mode as a way of first learning. First, you want to learn patterns in markets before you have to worry about putting money at risk. And, there still are performance issues. If you trade in simulation mode, there's still a P&L. It's just not your actual money. But once you learn those patterns, it's very important to start putting on risk. Take small risk and larger risk because it is different when you have money on the line. It's like the difference between practicing in rehearsal and playing at game time. With professional traders, they've already gone through the first phases of their learning curves. They're already profitable, but they're trying to grow their profitability. And so a lot of what I work on amounts to building their strengths, figuring out what are they really good at and how can they expand the best of what they do, which is different than a beginning trader where a lot of times you're correcting mistakes and weaknesses. Here, you're looking for strengths and building those. I have a book that will be coming out in 2025 called Positive Trading Psychology. And it's the application of positive psychology to the trading world. Positive psychology is the psychology of our talents, our strengths, our well-being, our happiness, our fulfillment, building our positives and learning to apply our positives to the markets and the strategies that we trade. So that's a big part of what I do in helping folks at hedge funds. It is relevant to the beginning trader as well, because if trading is a performance activity, we have to first figure out what are our talents. What are we good at? We want the talents of a very short-term trader, a very short-term day trader, are very different than the talents of a swing trader or an investor. Those take different abilities, different cognitive processes. For example, the very short-term trader has to be excellent at quick thinking and pattern recognition. Now, if I don't have those talents to begin with, trying to become a scalper, a short-term trader, is not going to work for me. I have to learn trading in the areas of my strengths, in the areas of my talents. And that's where positive psychology is relevant. Once I start in areas of talent, Then the next step is to connect with a mentor or mentors, people who can teach me skills. Just having talent isn't enough. We have to translate the talent into skills and build our best skills, which also is a positive area of psychology. And then when we have talent and we have skills, then we can work on our mindset and make sure that we're energized, make sure that we're focused in our peak condition of mind. I don't think it's just about personality. I really do think you have to try many different types of trading before you figure out what your strengths are. For example, when I was in school, I played many different sports. Most of them I was terrible at, really bad. Okay, but that was information, right? I was better at basketball. And so I ended up pursuing basketball, and I ended up practicing it. And I practiced harder because I really liked it and learned from coaches and so forth. So I think the beginning part of trading is just looking at, learning, trying out different markets, different strategies, different time frames, figure out what speaks to you and what you're good at. And maybe you're not good at trading. That's a real possibility. Maybe that's not where your future is meant to be. And that's okay. You know, I've talked about this in my previous books. I tried trading full time and I made money, but I didn't like it. It wasn't for me because I enjoy working with people. I'm a psychologist. So sometimes trading is not our path, and that's okay. We have to figure out what other areas speak to us and represent our strengths. Professional traders don't think in terms of dollars and cents. They think in percentage terms. So if they're willing to risk, let's say, 0.25% of their capital on a specific trade, well, they might start out managing 10 million as a junior trader, and then they'll manage 50 million, and then they'll manage 100 million, and then they'll manage more. But it always stays as 0.25%. So they think of risk in percentage terms to make it easier to scale up. In general, and this is something I talk about in the new book, you want to scale up in a stair-step way. So you start at a low level of risk-taking, get profitable, get consistent. Once you're profitable and consistent, you increase the risk-taking and get profitable and get consistent at that level. And then you risk a little more and get profitable, consistent at that level. So you're gradually, in a stair-step way, bumping up the capital at risk, bumping up the risk-taking. And that makes it sustainable. If you try to go from a low level to a high level too fast, it becomes overwhelming. And you could lose all the profits you made up to that point, which takes a toll psychologically. I think when you have consistent profitability for a period of time, you want to be profitable, you want to be successful in your risk management, and you want to do it for long enough that you're succeeding in different market conditions. And once you've done that in different types of markets and you've maintained that consistency and that profitability, then it's definitely time to move up. Even the best traders I work with, people who are managing $1 billion or more of capital, when you look at the percentage of their trades that are profitable, by and large, particularly in macro and particularly in directional equities, it's not much higher than 50%. So losing is a big part of the game. And you have to figure out how to lose the right way to sustain a long career. And the way to lose the right way is to always learn from losses. Maybe you'll learn something from the market you're trading. Maybe you'll learn something about how you generated the idea or how you structured the position or how you sized the position, but you always want to take away learning. And if you're a person who loves learning, then that's going to sustain you through a long and hopefully successful career. Well, there are definitely differences. The really good traders are workhorses, not show horses. They really put in effort and have an intensity about their learning. They build their confidence. They build their positive psychology in how they learn and how they improve their performance. Many times you can learn a lot about a trader by how they work on their trading and how they work on themselves. The really good ones work very hard. I think books like the Market Wizards series by Jack Schwager are very helpful because you see some of the common characteristics of successful traders. There are real differences. For instance, a purely quantitative trader is different in how they process information, obviously, than a purely discretionary trader. Where I see similarities is in process. They do different things and they do things differently, but the process of how they learn new opportunities, how they develop skills, how they build their business, that process is a similar one. When I've done evaluation of traders, one thing that comes out consistently is the factor of intellectual curiosity. The really good traders love to learn markets. They love to learn. They love to explore. They love to explore. They love creativity, finding new things, doing new things. And that excitement about learning, that creativity, is what keeps them motivated even during the times of drawdown. The really good traders aren't just interested in trading, they're interested in markets. They have a fascination for markets and learning markets, and that's that creativity, that's that curiosity that keeps them going. If they're only interested in trading in P&L, then their motivation is going to go up and down as our trading and our P&L go up and down. If you start small and gradually grow, the way we talked about in that stair-step way, then the losses will never be too big. You should never lose so much money that you can't come back reasonably. So you keep the risk-taking moderate, and that keeps your reactions moderate. And that's really important because over time, you build a tolerance to the ups and downs. You become familiar with those. The other thing is something I've mentioned in my other books. It's something I mentioned on the Trader Feed blog. And by the way, a lot of the topics we're talking about, if you look them up on the Trader Feed blog, TraderFeed, a lot of articles. I've been writing that since 2006. A lot of articles on these kind of topics. But one thing I've emphasized on the blog, I've emphasized in my books, always, 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 always have things in your life that are more important to you than trading and more important to you than P&L. So I have a family, a wife of over 40 years. I have 5 kids, 7 grandkids, 4 cats at home. I also have my career as a psychologist. I also I do teaching. I'm involved in many spiritual activities. I have many different things that are important in my life, and trading is one of them. And so if trading goes up and down, if the P&L goes up and down, it's just one part of my life. It doesn't define who I am. If I make trading everything and all important, I'm going to be vulnerable. And that's a hard place to be because the P&L always does go up and down, given the uncertainty of markets. Discretionary traders can be very process-driven. Being process-driven means that you follow certain rules, that you follow certain procedures, but you use your judgment. And so I may use my judgment to enter a trade. Let's say I'm trading stock index futures and we're breaking out of a range to the upside, and I'll buy that breakout because I see it's coming on increased volume. That's a discretionary trade. But how I prepared for that trade, there is a process to it of what I look at, how I look at it, how I size trades, et cetera, et cetera, et cetera. So I think process and discretionary trading go hand in hand. Otherwise, it's just trading on impulse, and that's a waste of time.
The problem that you look at and say, if I only do this, this, and this, then I should be able to handle it. I should be able to use my willpower. I should be able to use that focus and never giving up to be able to mold my psychology and pull it in line. But the truth is that the problem that we really have that nobody can see, we're blind to it, is that we have an animal brain sitting around in the back of our brain, and it's conservatively, it's 6 to 8 million years old. Life was different 6 to 8 million years ago, and it just so happens that it was so concerned about survival that a lot of its responses to either opportunities or threats in the environment were automatic. They bypassed thinking. And what we don't recognize is that this instinctual survival skill set that we bring from our ancient caveman ancestors, that is what's causing the massive amounts of problems. Because, again, it doesn't think. It sits there observing, looking for threats or opportunity, and it seizes them without thinking. And so when you're a trader and you've got this strategy, it's all cognitive, it's, you've got it down, and then you start saying, okay, now I'm going to put money into the game. I'm going to risk capital. What people don't recognize, the moment that you risk capital, you absolutely turn on all the ancient brain survival strategies. And your thinking brain, the one that makes us so different than other animals, is not even included in the loop. Okay? So when you sit there and all of a sudden you look at a position and it's getting closer and closer to your stop, and you're going, oh my God, I don't want to lose. The caveman brain, that ancient part of your brain, is not thinking about the loss of capital. Caveman doesn't even know what capital is. If you gave him a chunk of cash, he would look at it and maybe use it for tinder to light a fire, but he would not know conceptually what that was at all. But what he does know is risk. What he knows is threat. What he knows is that money becomes representative of his power to survive. And suddenly it's threatened, and everything's bypassing the thinking brain, and he's acting instinctively. Unless you can slow that down, okay, and work with it, the chance of you actually getting outside of this thing of having really good knowledge and being able to just make tons of money with paper money, it's never going to go away, because you are turning on something that you're blind to and you can't see it. And because you can't see it, it just smacks you in the face. That is the biggest problem that traders face, and they walk in and they don't see it. Your survival brain, and again, this survival brain is not human brain. It's not the thinking brain. It is a mammalian brain. And what happens is when it encounters a threat or opportunity, like overtrading, is that it activates, shuts off the thinking mind completely, and it finds a successful route. And when it does that, it wires it in. It becomes automatic pattern that also operates outside of thought. So that's what you've got with a trader, and people come in and think they're going to make all this money, and they don't realize that they're going to have to do a rebuild And it's just LeBron James is one of probably in basketball is probably one of the best examples of this. Is he has extensive training and uses his extensive training to produce the mind that is in the moment when he plays. And out of that, he's gotten past a lot of his instinct response, and he's been able to invent the way he responds to challenges very differently. And we all can do that, but it really takes quite a bit of effort to be able to say, I'm going to retrain my mammalian brain, my caveman brain, so that it's accepting of risk now and change the conversation it has about the risk being a threat to life or an opportunity to live large and in charge by killing a woolly mammoth. But that's what's happening. Well, the first thing is you have to really begin to understand emotions very differently than we typically think of emotions. We think of emotions as, I don't really like them, and just push them away. And the truth is, Eddie, we are emotion. We are emotion. The major thing is that what you have to do is you recognize that emotions are very different than what we thought they were. Emotions from a technical standpoint, from a neurobiological standpoint, are actually biological action potentials that coordinate activity between the organism, that would be the trader, and the environment, that would be the markets. Okay? When there is a change in the markets, there automatically is an emotional response in the organism. So when you're watching your charts and you're seeing stuff happen, all those things represent triggerings for you to different emotional states. And they're biological action potentials, and generally they're about fight, flight. And so the thing is, when that trade goes against you, it's a change in status. And then what it triggers is this immediate response to want to either fight or flee. Okay? And out of that, what happens is you're going to have to learn that how do I intervene into that process? If I'm getting that these emotions are adapting me to survive short term in an environment. And I'm realizing that in trading, basically it's instant karma. It's really rapid. Things are happening really fast. Emotion responses happen really fast. And the thinking brain's offline. So what you're doing is say, how do I go about changing the way I respond to uncertainty? Because ultimately, what you're looking at in your P&L statement, you're looking at your beliefs in action about your ability to maintain and work with uncertainty so that you're extracting more capital out of the markets than you put back in. And if it's not working your way, what you're saying is, what are the beliefs at the bottom of that emotion are triggering and having me act the way I'm acting? You get that, and the very first stop is emotional regulation. Emotional regulation is, and the way I view things, is the tension you hold in your body, and it's the way you're breathing. For instance, if you want to be angry, you're going to be holding your breath, and that breath is fueling the emotion anger to trigger, to grow, and to act, get your body to act in the world. At the same time, it may have the response where the emotion triggers you to a fear where you see threat, okay? And you suddenly you're going to run. What you're saying is, what's the belief? I'm powerless. I can't handle this. Or I have to prove that I matter. I'm not really worthy of stuff. You have to get to that level of your belief system. And then you say, okay, what I'm going to have to do first, if I breathe diaphragmatically, like moving air into the belly, using your abdominal muscles to pull air down, expand the chest, hold, and release. And in that process, you're saying, okay, let the tension in my body drain, drain, drain. And what happens is you take the emotional arousal off, you start calming down. The breathing style that you're breathing is suited for states of calm. And that fear and anger cannot coexist with the diaphragmatic breathing. You're actually managing a very ancient response to threat. And you're not allowing it to get to the action point of where you're doing something stupid like overtrading or, your revenge trading and stuff like that. That's the first step. However, Emotional regulation by itself is not going to solve the problem. The next thing that the trader is going to have to learn is he's going to have to learn how to be mindful. He's going to have to learn how to recognize an incredibly important aspect, that he and his thoughts are not one and the same. In fact, the trader is not having thoughts, they're having him. And you begin to recognize, oh, these aren't my thoughts. Well, whose are they? And it sounds kind of weird, but all of a sudden you discover is that thoughts to neurobiology are actual electrical behaviors running in the brain at 225 miles an hour. And when you start breathing and you start talking to yourself, for instance, that speed goes down to 50 miles an hour. You got a lot more control. The door to the mind can open and you start saying, okay, if I am recognizing that I can step back out of thought and I can watch thought as not who I am, but as an aspect of, in neurobiology, your brain is really a community of rival emotional programs that are duking it out to get control of the self. And the mind is the place where that community is given voice. And if you've ever been trading and have self-doubt, you've experienced a number of different voices. Oh my God, what if I'm wrong? What if I'm wrong? And at the same time, you know how to do this. You know how to do. You hear these battles going on inside your head, and ignoring them and thinking I must be crazy if I'm having these thoughts running in my head. The thing is, you're crazy not to recognize who's in charge of the leadership committee in the mind. And what I teach is that you start pulling back and you start saying, okay, who are these special interest programs, emotional programs that are seizing control of my mind when I'm in challenging moments, when I've got money at risk? And what you'll discover is that it's pretty simple. It's not a mystery. There's an aspect of your being that I call the inner critic. It's highly destructive. You would hear it by saying, you're never going to make it. You might as well give up, or get in that trade now. Don't let it get away. It's not in your plan, but you hear a voice telling you to do something. And you realize, oh yeah, that voice is in my head all the time. I try to ignore it. Well, you've given it power if you do that. And you're saying, okay, now I have, as part of this cacophony running in my head, I have an inner critic voice that wants to destroy me. You also recognize that you have an adaptive voice that's the one that feels the fear, feels the anger, feels the urgency to prove himself. And you're recognizing that's not a part of the self, part of this community that you have in your head that you want trading. But yet that's who does most of, particularly a young trader, that's who's doing most of the trading. They're okay until there's risk, and they trigger then to caveman brain and impulses take over. But when you do that, you realize, oh my God, what I also recognize is that I need to learn how to know myself. I need to actually know what is actually causing me to be fearful, and you get to know the beliefs that are driving. And Eddie, and this is really simple, particularly with alphas. They want to matter. They want power. They want to make things happen. They want to do all that stuff so that they matter. Other people trade, and what they're doing is they find out where their self-worth is. And, there's a lot of guys who, I've worked with a guy who was working with a high six-figure account, and every time he went over into seven figures, he would lose back down into the high six figures. That had been going on for 10 years when I met him. And ultimately, he grew up in a family where his father was a blue-collar manufacturing guy in Detroit with the cars. And what happened is all the unions and the management were always fighting, and he would slam his fist on the table and say, nobody's worth $1 million. And here's this kid sitting at the table being hypnotized by this, becomes a trader, and every time he hit seven figures, he would trigger this thing, nobody's worth $1 million, and he would lose back down, get into the area that was okay. He would trade there, and he would finally get back up to seven figures again. And that had been repeating. That's why you have to get to know yourself. And you're going, okay, well, how do I do that? And the next thing that you do is you find out that you are endowed with incredible, powerful emotional programs of the discipline of a ruler, the courage of a warrior, the self-soothing, the calming, the compassion of a caregiver, and the impartiality, that clarity of thought that is so coveted in trading, of a sage. And what I've done is I've taught people how to locate these emotional programs, to grow them so that they become much more powerful as an influencer inside the brain. But ultimately, you're learning to realize that, of course, there's going to be conflict in the mind. Your job is what construction of mind am I going to bring into the moment of challenge? And Eddie, and that's the thing that you actually control. Your caveman brain wants to control outcome. In caveman terms, it would be called controlling environment. Okay. And trading, we would call that control of outcome. But the thing is you are possessed to want to control outcome. And we keep thinking by willpower, by strength, that we can control outcome. We keep seeing that it doesn't work, but our ancient brain keeps us in that pattern. And the deal is you finally come to a moment where you start retraining the brain to recognize the one thing that you really do control is the mind that you bring into the moment of challenge. And that's all the work of beginning to understand mind, to be able to say, these are the forces at work, and that I can actually influence what mind shows up. That's what guys like LeBron James have figured out. They can influence the mind that shows up to perform. They're not trying to win. They're trying to perform. They know that if they perform well, that they have a much greater edge in the ability to win. But they don't directly control winning. They control the quality, the construction of the mind they bring into the moments of challenge. Now, that's a lot of talk about saying this is what you have to do. But Etienne, this is what you have to do. You really have to. You've been through this, okay? And what happens is that it comes to a moment of where you have to say, I have to produce self-mastery of the mind that trades. And you have to construct that mind. And about 2.5% of the people who trade will do that. It really goes back to this primitive brain and the fundamental beliefs that you hold about life. And it comes down to, what are your beliefs about your ability to engage uncertainty and prevail? And when you take a look at a person who is overtrading, he has a belief that the good times are going to roll and that the dice are going to go down and he's going to make a bunch of money and everything's going to be happy. That belief may work in being a salesman, okay? It may work in various areas and do very well. But in trading, the trading gods just don't really care about that. Ultimately, you can do that. And if you jump into things, you're gambling. And it's kind of like if you play poker, and if you've ever played, my dad flew in World War II, and when he left London in 1945, he was a pilot, so he had his own B-17. He had a suitcase that had $500,000 in cash in it. Now that's $1945. Okay. He won all that by playing poker. People didn't realize who they were playing poker with. He had a photographic memory and he could count cards. He had an advantage that he was not gambling. Okay. But if you played with him all night long, he was going to take your money because he had a process, he had a plan, and most people were just simply, they didn't know the cards, the possibility of the cards and stuff like that. My dad did. Okay. Now, the same thing applies in trading, is that if you have a prepared mind and you recognize that this is really about the management of probability, not survival in the moment, caveman, but the management of probability, is you come to a moment of going, these are the things that this is the validity of a setup. And what happens is, if this thing doesn't work, I want to get out with as small loss as possible. And that's probability thinking. And then you get in, and if things work out, everything's cool. But the thing is that the trader, the expert trader, is in a place where he's not really winning or losing. Losing is only landing on the wrong side of probability, and winning is only landing on the right side of probability. Taking that view, winning doesn't mean, no, it just means this time I landed on the right side of probability. Okay? That changes the fabric, because then you become immune, or I wouldn't say immune, but you've mastered the place of where I can't allow, the only emotions allowed are discipline, our patience, and our impartiality. When you're actually in a trade, working trades, you can't allow the other voices to show up. And out of that, you're going, okay, if I win, I advise people when they win to go take a walk. Okay. Simply to burn out the chemistry of winning, so that when they come back, they've burned out that chemistry, and the euphoria, the feeling good of winning doesn't cloud their mind, so that they're making dumb, stupid mistakes where they think, oh, I've got it. And if you lose at the same time, it's something where you soothe yourself and you come to the moment, you come to ask, okay, was this a method mistake? And let's just say it wasn't. Okay, this is my plan. Was it a psychological mistake? No, I played it really just the way I wanted to. And then you go, oh, so this was just probability that it landed on the wrong side and of your opportunity. And you're going, yeah, that's what happened. Then you ask the final question: would I take this as a trade again? Because a really good trader, a professional trader, is going to be needing to take 70% of their valid setups in order to work their edge. And so you have to be like, okay, that one didn't work. And it had nothing to do with my performance. It had nothing to do with my methodology. It had everything to do with, that was probability. And I took a small loss. I got out. That's in many ways a victory. You did exactly what you needed to do in order to be able to move forward your edge into the world. That's a powerful trader. The ones that sit on the back side and say, oh my God, what if I'm wrong? What if I'm wrong? What if I'm wrong? What I want you to do is, again, look at the belief at the very core of this. And that belief is, you can hear it. What if I'm wrong? What if I'm wrong? I need to be right. I need to be right. And the thing is that in trading, you're not going to be right a lot. Okay. And you learn how to build a mind that says, okay, I wasn't right on that one. But the thing is it was in my probability distribution. The guy who is hesitating, what happens is he's going, okay, I need more confirmation. I need more confirmation. And what you're hearing is that there's only a certain amount of confirmation, that if you get more confirmation, it does little to your chances of winning or losing. And you're going, what is the level of confirmation that I need to be able to enter the trade and say, okay, I've done the right thing. It is a valid setup I'm in. And what you're going to discover is that they're scared of making a mistake. And it happens particularly if you happen to have grown up in a high achieving family where making straight A's, making this, achieving is a big deal, is the kid grows up scared of losing, scared of not performing. He carries that into trading, and by sheer willpower is the way he's been operating. He gets into trading and willpower means nothing. And suddenly he starts going, yeah, but how do I stop making a mistake? And the truth is that if you view it as a mistake, you've already lost. This is probability, where you can do everything right and you can still be wrong. It's just probability. And until you come to the belief that's basically saying, I am not confident, I do not feel as though I'm confident to be able to make sure I'm right. I'm scared that I might be wrong. I'm scared of disapproval. I'm scared of judgment. And that is what has to be mastered. Otherwise, you stay stuck in that over and analyzing till you're paralyzed, and the trade gets away. but it was just probability. They want certainty. That's that wanting to control outcome by more and more and more. And in trading, you have to let that go. That's what happens. Happens all the time. And, it's one of these things where I wouldn't have a business if it weren't for that. And I have a thriving business. So, and a lot of people will avoid that because they don't want to see that there's something wrong with them. And unfortunately, if you're not willing to look at what's wrong with you, you cannot reorganize that potential into higher functioning trading. So trading remains probably the most powerful self-mastery avenue or journey that could ever be invented, because you truly have to learn how to have a probability-based mind that doesn't mind losing, can learn from losing, and doesn't equate losing with who they are as a human being. Losing is just simply either your competence or probability, but your inherent worth as a human being, it's not measured. Now, I'll give you a good example on that. I have a good friend, Dolores and I have a good friend that has made, somewhere between $200 and $300 million in the last couple of years. He's an options trader who is, when you start getting up into $200-300 million over a couple of years, you're talking about one of the better traders in the world. Okay. And so I was sitting there talking to him one time and I said, Mitch, how did you do this? How did you go to the point of where, and you watch him and he's just not concerned about anything. He's trading and he's trading size in a way that you go, my God, And he said, something, a long time ago, I lost $750,000 in one day. And he said, that was the time when $750,000 was an enormous amount of money to me. If he lost that now, it'd be, But he said, I lost it and I freaked out. I knew that I needed to tell my wife, but I was scared to tell my wife because she might leave me or get angry. And so I hesitated, but ultimately I realized that I had to tell my wife. And so I got all my courage up, thinking all the horrible things that she was going to do to me. And I told her, and she reached out, pulled me to her, hugged me, and we cried together for about 15, 20 minutes. And he says, Randy, out of that experience, I learned something really valuable. I learned, come win or lose, I'm still lovable. And that allowed me to separate my performances from my being. My being was lovable. I was good either way. And that freed me from trying to prove myself. And if there's anything that I believe a trader needs to learn, is that very lesson. Now, it really caused him to rethink money and what money represented to him and stuff like that. Now, he's got institutions. He's got, he's helping others now, basically doing, not just with trading, but in order to having an impact on how people come to view themselves at early ages and things like that. So you can see that his whole conversation about money also shifted, and he began to see himself more as a steward of a gift. And the gift was really finding out that whether or not he won or lost, he was okay one way or the other. And and is deeply happily married for 40-something years. And he no longer has a concern about winning or losing. He's really just totally into performing because he knows he's loved. So even to a trader, suddenly this thing about being lovable actually shows up. And that's one of the things that people trade for. If they make a lot of money, then they'll be liked, they'll be loved. And the truth is that if you make a lot of money, you're just following your rules a lot. To me, anytime you take a loss, you need to handle that loss right there and then. And there's a good chance you need to get exercise. If you've had a string of losses and you can start seeing that it's really getting a hold of you, is the first thing is to burn the chemistry. Okay? That's taking over, because when you have that, oh my God, a loss, that's going to happen again. At the bottom of it is that when you feel, that pit in your stomach, you're feeling the chemistry of an emotion in your body altering the way you perceive. And what I've also come to understand is that the most important thing that you can do in taking losses is to self-soothe, to have compassion for yourself. Because it's in the compassion, the self-directed compassion, that you get out of that state of mind. And you start realizing that Eddie and I actually will use what is known as a transitional object. And it's a Gestalt technique that you push out this sad part and you talk to it. And I will often have people use a teddy bear or some sort of symbolic representation that they soothe. They actually soothe and stuff like that. Let me show you something. You see this? This is something everybody who gets a heart transplant at Duke Medical Center gets. And I tried to throw it away probably 10 times in the last 5 years. Okay. But I will go pick it up out of the trash and save it again. And what happens is that when you cut your sternum, it really hurts to laugh, to cough, to sneeze. And what you learn is to take this thing, put it like this, and hold it tight. You're actually self-hugging, self-loving, because you don't want that sternum to move. Otherwise, you're going to be in excruciating pain. And what happened is I started doing that, and I started realizing that I actually like the feeling of self-hugging. Now, I don't, but I use this pillow as a symbol that allows me to calm down. Okay, I got a hug going. I can calm down. And once you calm down, you can reassert the mind. It says, okay, I know that, and I would use the language of that's orphan feeling sad. And that orphan needs to be picked up, needs to be hugged, needs to be shown that we're okay. We've got everything together. We're following our plan. These are acceptable losses. And if you come to a moment of where you can't handle it, you need to take a break and say, this is as much money as I'm going to lose. I'm going to start with a new mind. But if you have become really proficient at being able to manage the mind that you bring into the moment, you're in a place where you can say, I'm going to go through this routine that allows me to calm that part of myself down and reassert the mind that I need to work in probability. You have to start asking, how does the problem manifest? What's very common in stuff like this is sabotage, where they have a period of days, weeks, months, even a year of where they're doing quite well. And the problem there with them, that group, and then they blow it up and give some more back. And ultimately what happens is that they're not managing the mind they bring into the moment. When you start winning, it's easy to recognize that you're feeling a reward system, the biological reward system. You're feeling dopamine, and you're feeling, look at me, I've got it. Yeah. I've turned the corner. And to me, that is the most dangerous thing there is. You cannot afford to allow yourself to feel good when winning while you're trading. You can't do that. If you want to feel good, go out someplace else away from your trade arrangement and feel good. But when you come back, you put your mind back where it needs to be. So ultimately, what you're looking at is going, okay, what he did is he did not manage the sense of feeling good, and he ended up getting euphoric, and that led him into overconfidence, where he thought that the good times are going to roll on forever. I've arrived. And what happens is that's a setup for blowing things up, because you're never in control. You can control the mind that you bring to performance, but you can't control outcome. That is the one that I see the most. And that's the one that actually has reason to keep on, because he gets to these periods where he wins. But I promise you, what you will see in there is the beginning to feel overconfident. That actually, when I was in China, I was doing this tour, and I was in this very huge fund management where there were both position traders and they were regular day traders, and I was giving this speech, and I made the statement that you can't allow yourself to feel good when trading. And one guy with really good English raised his hand, and he says, "But I like feeling good." And I said, "You can feel good, just not when trading." And I went to how the way it influences it, and it gets into the moment of where you start feeling euphoric, you get overconfident and move on. And he says, "Well, I like it." And I said, "The problem is China has been on a bull market for the last 50 years. It's pretty easy to make a lot of money and think you're doing it," which insulted the guy. And he got up and he left, and about 20 other people got up and left too. Okay. And I'm going, well, the ugly American, I'm here. Okay. 2 days later, there was a correction in their stock market, 2% correction. And at any rate, this guy, I have to give him credit. He came up to me and said, "Mr. Howell, I now understand what you mean, is that I saw this coming, but I felt too good, and I did not come in back into cash when I saw it coming. I refused to see because I felt like I could handle it. And so I had a really bad day, and I see very clearly that I set myself up for a blow up, for sabotage." And you're looking at it and you're going, okay, that's the way it works. So I'm assuming that the people that you're talking about right here are the ones who have this moment of actually doing well, and they get euphoric. It's a very common problem because people will believe that Randy, if you can only teach me to master this fear that I have, everything will be fine. And then they do that, then they meet an even bigger demon on the road to success, overconfidence, and it blows them up. That's the major thing that I see there. And there's some people that, for whatever reason, there comes a moment. I had one trader who finally came to understand that he had to give up control in order to become a successful trader. And what he said is, "Randy, I've become consistently profitable. But the truth is I like control, and I don't want to give it up. And what I've chosen is to leave trading, because I've recognized that if I want to become a really good trader, I have to let go of control." And he understood himself well enough. He was not willing to do that. And I consider that to be a victory.
All right, so I hope you got some value out of this. I'll leave you a link for the playlist. If you want to watch other masterclass we've done like this that compiles some of the best traders' advice out there, check it out. It's going to be linked below, the first link somewhere. And I'll also try to put it on the screen over here. You can check it out. This is really our playlist of all these masterclasses. We have probably near 30 hours of content for this, so you can check it out. And comment below with your favorite advice. Which phrase or lesson resonates with you the most? Comment below, let us know. And we'll catch you back here in the next video pretty soon. Ciao.